And all right, and welcome back to We Are Cosmic, guys. I hope you're all having an amazing day out there. If you're new here, this is the place where we break down the latest in crypto, finance, and the future of digital assets, all in a way that's easy to understand. Today, I've got some breaking news on XRP that you absolutely need to hear. And trust me, it could have huge implications for the market. So grab a cup of coffee, settle in, and let's dive right into it. Let's talk about what's happening in 2025. This year has been wild in terms of market manipulation, more than anything we've seen in the past 7 years. And yet, traditional markets like the S&P 500, NASDAQ, and Dow Jones are hitting all-time highs. It's almost like a paradox. The crypto markets, especially Bitcoin, are struggling while the stock market seems unstoppable. But here's the thing. This is all part of a larger setup. We're on the edge of what I believe will be one of the greatest transfers of wealth in history, and XRP is right at the center of it. Now, I know a lot of you are probably wondering, why isn't the price reflecting all this positive news? Well, that's where market manipulation comes in. This isn't about retail investors like you and me making moves. It's about market makers and whales controlling liquidity, buying up assets quietly in dark pools and over-the-counter markets. These are the players who know exactly what's coming and are positioning themselves to benefit massively once the market shifts. And the way I see it, XRP is set to decouple from the rest of the crypto market and head into 3 to 4 digit territory in the near future. Before we get deeper, here's a quick engagement check. If you're a fan of Ripple and XRP, go ahead and type an X in the comments. Also, hit that like button if you're excited to learn what's really going on behind the scenes. This helps us reach more people who want to understand the crypto market in a clear, professional way. Now let's talk about some current events shaping this market. Japan just released some interesting data. Its 10-year government bond yield surged to a record 2.10%, up 100 basis points in 2025. That's a huge move for global financial markets. And on top of that, we have major institutions like JP Morgan considering offering crypto trading services for their clients. This tells us one thing: liquidity is about to flood the market. And XRP, being closer to the institutional side, stands to benefit immensely. Meanwhile, precious metals like gold and silver are also hitting new all-time highs alongside the stock market. This shows a systematic shift in how capital is moving. People are preparing for larger changes in the financial ecosystem, and digital assets tied to real-world adoption like XRP are strategically positioned to profit. So, to wrap up the opening, here's what you need to remember. 2025 is a year of market manipulation, institutional positioning, and preparing for massive liquidity. XRP is not just another crypto, it's a digital asset increasingly tied to real financial infrastructure. Over the next few parts of this series, we're going to unpack exactly why XRP could be the biggest beneficiary of these trends and what you should watch out for as an investor. Stick around, because we're just getting started. We Are Cosmic is here to give you clear, actionable insights in crypto without the hype or confusion. Let's get ready to break down the biggest opportunities for XRP in 2025 and beyond. Let's start with Bitcoin. This year, Bitcoin has dropped roughly 28% from its peak, marking the worst Q4 it's had in 7 years. And here's the kicker. This happened without any major scandals, FUD, or exchange collapses like FTX in 2022. No bad news, no chaos, yet the price is down. That's a clear sign of deliberate market control. Who's controlling it? The big players, the whales and market makers, the ones with deep pockets and insider knowledge. They know exactly when and where liquidity is coming, and they're moving strategically, not randomly. Now let's connect this to XRP. XRP is closer to institutional adoption than many other cryptocurrencies. Banks, payment providers, and even governments are starting to recognize its potential to reduce systematic financial risk. While Bitcoin struggles in the retail market, XRP is quietly being accumulated in dark pools and over-the-counter markets away from public attention. This is why I keep saying that XRP is likely to decouple from other crypto assets. While the rest of the market may fluctuate or remain stagnant, XRP could see massive upward moves when the broader market starts catching up. 2025 has also shown us some unique financial signals. We've seen the S&P 500, NASDAQ, and Dow Jones hitting all-time highs alongside precious metals like gold and silver. This combination of rising traditional markets and crypto stagnation is unusual. It tells us that capital is being strategically allocated, not randomly invested. Investors are looking at where the biggest gains will come from when systematic risk is addressed, and XRP is one of the assets positioned for that. Another important factor is global economic signals, like what's happening in Japan. The 10-year government bond yield surged to 2.10%, showing that interest rates are rising and liquidity might become more attractive in other markets. At the same time, large institutions like JP Morgan are preparing to offer crypto trading services to their clients, which signals that institutional crypto adoption is accelerating. All these events point to one thing: XRP is in the perfect position to benefit from the next wave of liquidity. It's also worth noting that manipulation doesn't mean a bad market. On the contrary, it's part of the natural buildup before a major movement. We've seen similar patterns in previous years, but 2025 is different because of the scale and the clarity. Big players know what's coming, they're positioning themselves, and XRP is increasingly becoming the go-to asset for institutional strategies. When the general market finally recognizes this, the price action could be dramatic. Finally, let's tie this back to you as an investor. Understanding market manipulation and institutional positioning is crucial. It helps you see beyond the noise and focus on which assets are truly being accumulated for long-term gains. XRP, with its strong institutional connections and potential to solve systematic financial problems, is a prime candidate. If you pay attention to the signals, like accumulation in dark pools, ETF rumors, and global financial trends, you can position yourself ahead of the curve. Welcome back to We Are Cosmic, everyone. In this part, we're going to take a closer look at global macroeconomic events and how they're setting the stage for XRP to thrive. Understanding what's happening with interest rates, government bonds, and institutional liquidity is key to seeing why XRP is positioned for massive gains. Let's start with Japan. Recently, Japan's 10-year government bond yield surged to 2.10%, marking a 100 basis point increase in 2025 alone. For those unfamiliar, this is a huge shift for one of the largest economies in the world. Rising bond yields usually signal that capital is being pulled from other areas and that interest rates might increase globally. What does this mean for crypto? Well, it creates a scenario where investors are looking for alternatives, and digital assets like XRP, which are more connected to institutional finance, become increasingly attractive. This brings us to the concept of global liquidity. In 2026, we're expecting a significant influx of liquidity into financial markets, and XRP is set to benefit more than most other cryptocurrencies. Institutions are preparing to inject massive amounts of capital into assets that are closely tied to banking and payment systems. Unlike other cryptocurrencies that remain highly speculative, XRP is already integrated into networks used by banks and payment providers worldwide. This makes it a prime candidate to absorb new liquidity and potentially surge in value. Now let's talk about JP Morgan and other big players. JP Morgan is reportedly considering offering crypto trading for institutional clients, which is a huge step. When major financial institutions start supporting crypto, it creates a bridge between traditional finance and digital assets. XRP, with its existing partnerships and blockchain utility, sits at the center of this bridge. This isn't just speculation, it's a clear signal that XRP is being positioned for the next big wave of adoption. At the same time, other markets like gold, silver, and major stock indices are hitting all-time highs. This shows that capital isn't disappearing. It's just moving strategically. Investors are diversifying their portfolios, looking at both traditional and digital assets to mitigate risk and maximize gains. XRP benefits from this because it's both a digital asset and a tool for institutional financial operations. It's essentially positioned as a safe harbor in the crypto space while still offering massive upside potential. Let's also discuss the systematic risk factor. Traditional markets have been volatile, and global economies are still dealing with uncertainty. XRP's technology can reduce risk and facilitate liquidity across borders, making it more appealing to institutional investors. This isn't just about price speculation. It's about real-world utility that can influence major capital flows. When liquidity floods the market, assets like XRP are ready to absorb that capital and potentially skyrocket in value. So, what's the takeaway here? By understanding macroeconomic shifts like Japan's bond yield changes, the movement of global liquidity, and the increasing institutional adoption of crypto, we can see why XRP is set to decouple from the rest of the market. While Bitcoin and other cryptocurrencies fluctuate based on hype and retail sentiment, XRP's growth is being supported by real financial systems and institutions. This gives it a stability and upside potential that is unique in the crypto space. We're going to explore one of the most exciting concepts in crypto right now, the decoupling effect. This is when XRP starts moving independently of other cryptocurrencies, creating massive opportunities for those who understand what's happening behind the scenes. So, what is the decoupling effect? Simply put, while the broader crypto market might be stagnant or even declining, XRP is poised to move upward dramatically. Unlike Bitcoin or Ethereum, XRP is not purely a retail-focused asset. It's closely tied to institutional use cases, banks, and payment networks. This means that even if other cryptocurrencies are influenced by retail sentiment, hype, or FUD, XRP's trajectory is being driven by real financial adoption and capital accumulation. One key driver of this decoupling is institutional accumulation. Throughout 2025, XRP has been quietly accumulating in dark pools and over-the-counter OTC markets. These are places where big investors can buy huge amounts without affecting the public price. While retail investors watch Bitcoin or Ethereum and wonder why prices aren't moving, institutions are strategically positioning XRP for massive gains. This accumulation is often invisible to most people, which is why the retail market underestimates XRP's potential. This is where understanding the market manipulation narrative becomes important. When we talk about manipulation, we're not saying it's inherently negative. It simply means that big players control liquidity and price movements, ensuring they buy at lower levels and maximize gains when the market shifts. For XRP, this has been a year of strategic buildup, preparing for a massive move that could happen once broader liquidity enters the market in 2026. Now let's talk about what this means for you as a retail investor. The key is to watch for accumulation signals and institutional interest. XRP is different from most cryptocurrencies because it has real-world utility in payments and banking. When large financial institutions like JP Morgan and BlackRock start recognizing XRP as a legitimate digital asset, it creates a foundation for long-term growth. Understanding this is crucial for positioning yourself ahead of the crowd. Another important aspect is timing. Historically, XRP has shown that it can surge very quickly, sometimes thousands of percent seemingly out of nowhere, especially when fear is high and greed is low in the market. This pattern is tied to the Fear and Greed Index, which measures market sentiment. When fear peaks, it's often the best buying opportunity. And based on current indicators, XRP is perfectly positioned for such a scenario. We also need to consider systematic risk in traditional markets. Interest rates, bond yields, and geopolitical uncertainty are creating an environment where institutions seek alternatives to traditional assets. XRP, with its growing adoption and liquidity-ready network, is exactly the kind of asset that could benefit from these trends. This isn't speculation. It's a logical conclusion based on where institutions are allocating capital. Finally, the big takeaway for retail investors is to stay informed, stay patient, and focus on fundamentals. XRP is not just another cryptocurrency, it's a strategic digital asset with institutional backing, real-world use cases, and a setup for decoupling from the rest of the market. By understanding this, you can position yourself to potentially benefit from one of the biggest movements in crypto history. ETFs, regulatory news, and how these could impact XRP's price. Understanding these factors is key because they often act as catalysts for major market movements, especially for institutional-focused assets like XRP. Let's start with ETFs. Exchange-traded funds are a way for investors to gain exposure to assets like XRP without directly buying the cryptocurrency. Over the past year, there's been growing speculation that an XRP ETF could be approved soon. While it hasn't been officially confirmed yet, industry insiders and executives at major firms like BlackRock have hinted at institutional interest in XRP-based ETFs. If this happens, it could unlock billions of dollars in capital into XRP, creating a massive surge in demand and price. Why does an ETF matter so much? Because ETFs are institutionally friendly investment vehicles. They allow pension funds, hedge funds, and other large financial players to invest in XRP without dealing with the technical aspects of holding crypto directly. Once these institutions start buying through ETFs, it creates a strong, stable demand base, unlike retail-driven price swings, which are often more volatile. In simple terms, an XRP ETF could be the gateway for massive, sustained capital inflows into the market. Next, let's discuss regulatory news. 2025 has been a year of clarity and preparation in the crypto regulatory space. Governments and regulators are increasingly seeing XRP as a legitimate digital asset tied to real-world financial systems. This is a stark contrast to the uncertainty of previous years when legal concerns overshadowed XRP's potential. As we move into 2026, favorable regulatory conditions, coupled with institutional adoption, could act as a perfect catalyst for price growth. Now, here's an important point. XRP's potential surge isn't just based on speculation, it's grounded in systematic financial developments. Major events like potential Fed changes in the US, interest rate adjustments, and institutional adoption all align to create a scenario where XRP could decouple from other cryptocurrencies and move independently. This is exactly what we talked about in the previous part. While Bitcoin and Ethereum fluctuate with retail sentiment, XRP's trajectory is tied to real financial infrastructure and institutional liquidity. Another factor to consider is market timing. Historically, XRP has shown the ability to move rapidly and dramatically when institutional and regulatory conditions align. For example, when fear is high and the market sentiment is low, XRP often experiences unexpected surges, rewarding those who understand the setup and are positioned ahead of the crowd. This is why staying informed and watching for ETF approvals or regulatory announcements is critical for any serious investor. It's also worth noting the global context. While traditional markets like the S&P 500, NASDAQ, and gold continue to reach new highs, XRP's positioning as a bank-friendly digital asset allows it to attract a different kind of investor. Institutions looking for alternatives to traditional assets are likely to see XRP as both a store of value and a functional tool in cross-border payments, liquidity management, and risk reduction. So, what's the takeaway for retail investors? Pay attention to ETFs, regulatory clarity, and institutional moves. These are the real drivers of XRP's potential price surge, far more than hype or short-term speculation. Understanding these catalysts gives you a strategic advantage, allowing you to position yourself ahead of the broader market. We've covered a lot over the past few parts: market manipulation, institutional accumulation, macroeconomic events, ETFs, and regulatory clarity. Now it's time to wrap everything together and give you some actionable insights on how to navigate the crypto space, especially with XRP. First, let's summarize what we've learned. 2025 has been a year like no other. We've seen record manipulation in the crypto markets, while traditional markets like the S&P 500, NASDAQ, and Dow continue to reach all-time highs. Meanwhile, precious metals like gold and silver have also surged. Despite all this positive news, Bitcoin and many other cryptocurrencies have struggled to show growth, and the reason is clear: market control by whales and institutions. They know what's coming, and they've been quietly positioning themselves for the next big wave. Here's the most important point: XRP is different. Unlike other cryptocurrencies that are driven mainly by retail sentiment, XRP is closely connected to institutional adoption and real-world financial systems. Banks, payment providers, and even major institutions like JP Morgan are preparing to use or trade XRP, which sets it up for a potentially massive price surge. This is what we've been calling the decoupling effect: XRP moving independently of other cryptocurrencies, fueled by real financial demand rather than hype. We've also discussed ETFs and regulatory clarity. If an XRP ETF is approved, it could unlock billions of dollars in capital, creating a new foundation for growth. Coupled with favorable regulatory developments and macroeconomic shifts, this positions XRP as a top candidate for a historic run in 2026. Timing is crucial. History shows that XRP can surge quickly and dramatically, sometimes when market sentiment is low. Understanding this allows you to strategically position yourself ahead of the crowd. So, what does this mean for you as a crypto investor or enthusiast? Here are some actionable insights. Watch institutional activity. Keep an eye on announcements from JP Morgan, BlackRock, and other major financial players. Their moves often signal where capital will flow next. Pay attention to macroeconomic trends. Interest rates, government bond yields, and liquidity events all affect crypto indirectly. XRP benefits the most because of its institutional connections. Stay informed about ETFs and regulations. Approval of an XRP ETF or positive regulatory news can act as major catalysts. Understand accumulation patterns. XRP is being quietly accumulated in dark pools and OTC markets. Don't rely solely on retail price trends. Focus on underlying demand. Use sentiment tools wisely. The Fear and Greed Index can help identify buying opportunities, as XRP often surges when fear peaks and retail interest is low. Finally, let's talk about timing and patience. The next wave for XRP isn't about chasing short-term hype, it's about strategically positioning yourself for long-term gains. By combining the insights we've discussed, market manipulation, institutional accumulation, macroeconomic shifts, ETF speculation, and regulatory clarity, you'll have a complete picture of why XRP is uniquely positioned to outperform many other assets in 2026. Before we close, here's my call to action. Make sure you subscribe to We Are Cosmic, hit the notification bell, and comment below with your thoughts on XRP. Are you ready for the decoupling effect? How are you positioning yourself for 2026? I love hearing from you, and your feedback helps guide future videos. In conclusion, XRP is quietly preparing for a historic run, and those who understand the setup and act wisely could see incredible opportunities. Stay informed, stay patient, and most importantly, stay cosmic. We've got a very exciting journey ahead, and I'm thrilled to share it with you. Thank you for watching, and I'll see you all in the next video.